Should I buy Sundial Grower stock? Will Sundial stock go up? Is SNDL a good stock to buy? Before we try to see if we can answer some of those questions, let's just have a look and see what's going on technically with Sundial. You can see it has crashed from this all-time high sometime last year, 17th of last year, close to a year ago, for at $3.46, and currently trading at $6, so at 0.69. Even though it has started to try to retrace some of those records, and it has a short interest of 8.29% for obvious reasons. The stock has been in battle, and it has had a lot of problems, a lot of dilution, a lot of very high cash burn, and you could just say probably not excellent and financial management and operational management as well. So let's see what we have here technically for Sundial. It says SNDL is showing strength within a longer term bullish trend. No, that longer term bearish trend. Sorry about that. You can see that this is the yellow line, this 200-day trend line. It is declining, but also looking like it's slightly stabilizing as well, especially in recent months. Its MACD is above the signal line, and the shares are presently 31.3% above the 200-day moving average. However, that moving average is declining, implying that caution is still warranted. The momentum for SNDL is strongly bullish. The 14-period slow stochastic oscillator is rising as investors pay higher prices for shares. Let's have a look. Yes, okay. So this is the closest we can come to the momentum, so that, which is the price rate of change. It has gone from negative some weeks ago. Now it's currently at 43, so at 43%. That's the price rate of change. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. So the volume also is in the upper half of the spectrum, and it's just a touching distance from the overbought territory. Okay, so well, all in all, you can see it has a float of 762.03 million shares. So this folks at Investor Place, they have they've covered this stock for some time now, and they have all sorts of things coming at it. The delisting threat from Nasdaq and their like, but we have been able to deduce that Nasdaq has given it up to 180 days of grace to ensure that it trades above $1 for at least 10 consecutive days, and this 180 days grace will run out by the 26th of June 2021. As a result of this, one of the things that they can do about this easily is just to reverse split, cut down this number, this very high float, cut it down. They can even cut it down by 10% if they do that. By 10 times. Sorry, if they cut it down by 10 times, so the current price will be about $6.90 or thereabout, and then it has also cleared its debt. That is also something the executives at that company are doing. They've cleared their debt, and in doing so, that is how they managed to run up this huge float of for 762 million shares. And it's also shoring up its balance sheet as well in the bid in all of those things they are also doing. They are moving away from wholesale to retail and branded products with a stronger focus on profits. And then the incoming Biden administration is also perceived to be positive towards marijuana stocks. So without this reverse splits and their like and all the stuff they're doing, there's a good chance that Sundial will even rise and probably reach up to $2. There's a good chance, given all that is going on now. You can see from the 31st of the last day or the last trading session of 2020, it was at 42 $0.42, and has since that time it has been up and up and up. So one of the key issues with it's not exactly a very key issue as such, with the stock is the huge float. The huge, it's not a big deal. All that matters is if there's interest. The market participants are positive and are willing to put the money in there to move needle, to move this stock up. So given all that is going on, it looks bright, and it has lost a lot of steam. It has been it's currently probably in some cases it looks undervalued as well. So I mean, given the decline that has happened over the for the last how many months, you might be tempted to say yes, this stock, and this should be a buy, and also given the restructuring that they are implementing in the company as well. So I would say yes, give it a try, take the risk, and put in some money there. Don't put a lot of money, nothing more than you can afford to lose, and let's see how it goes. A lot of things are coming into the stock. There's regulation wise, reform wise, fundamental wise, and technically. This stock has it's just only 30% above its 200-day moving average. You can this way 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 way. It has cooled down to anything you can expect. Even though we can also say that of recent it has been rising, but given all that it has done before, given that it has traded at $3 and some fraction about a year ago, you wouldn't want to even be bothered whether it has been rising for the last 7 sessions. So I would say in the long run, yes, I would definitely say it's worth taking the risk. Don't put in a lot of money. Not just put it in there. There's a good chance it can get up to $2 or thereabouts. And if it doesn't get there through the effort of the market participants, there's a good chance that it will also get there through the reverse split. And the executives at the company might even wait for the stock to rise a bit further before they even implement that reverse split. So if you're new to this channel, subscribe, like, and share. If you're already a subscriber, thank you very much for watching this video.